Hey, so you want to invest in the stock market? Like, comment and subscribe. Do me a favor, if you get some value from this video, make sure you leave a comment or share it with one of your friends. So I made a post on Instagram about a month ago. I've been investing in the stock market for quite some time. Got heavily involved in RBS, a crazy investment which still hasn't picked up.
Down, 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 down.
Stock market investing is not as difficult as many people think. It's not as complicated, it's not as convoluted, it's just not what you think it is. So I made a crazy post on Instagram, I think a month ago, where I said, hey, listen, every single person, you've got to start understanding how to take advantage of this pandemic. I believe, based on my small bit of experience, that every single person should at least have some of their money or their wealth in the stock market. To give you an overview, the stock market pretty much allows you to get a small tiny share, depending on how much money you've got. It allows you to get a small tiny piece of a big massive company. Now of course there is the A market, there's the plus market, these are the smaller markets, which means there is a bit more risk. Well, in fact, there's significantly more risk. But again, you've got to measure up what your adversity to risk is. What's your risk level? What's your attitude to risk? And then you can determine whether you're going to invest in the smaller cap market or the larger markets. Now, for the new guys, if you want to start getting involved in stocks and shares, and there are a number of things that you can do. Number one, get a better understanding about the stock market. Now again, of course, I've got to reiterate this. I am not a financial advisor. Therefore, do not take this as financial advice, but just use it for educational purposes. It's actually really simple to invest in a company. What you've got to do is find a reputable company, and I will make some recommendations based on the two that I use. What you've got to do is find your style. You've got to do your research. You've got to understand what you want to get out of the market. Are you looking for companies that will pay you a dividend?
Want some free money?
Fast growth? Are you looking for excitement? Are you looking for a company that has the opportunity to go the long haul? These are the things you've got to make a decision about, and these are the things you've got to research. And once you've decided what your strategy is going to be, now of course when I say strategy, I'm talking about what you want out of the market. I play the long game. If you look at people like Warren Buffett, he pretty much explains that you can't lose in the stock market because you play the long game. Logic is very simple. When a company lists on the stock market or on the stock exchange, they have one simple goal. That's to generate more cash for themselves. That's also to return a greater investment to their shareholders, which means their plan is to increase over time. That word is very important, over time, which means you don't put your money in the stock market today with the expectation that it's going to come out tomorrow. This is one of the biggest errors I was making when I first discovered investing in the stock market. I can name a bunch of companies that I've bought, and again, I'm just going to give you guys the truth. I've bought some companies based on news that I've read that day, which is the craziest thing, because every single person knows once it becomes news, it's moved past. So I used to buy into this is so embarrassing. So I bought shares in Newcastle United before. I bought shares in a company called Aventram. Who else? I bought tons and tons of shares, into some Google shares. In fact, no, I could only afford to buy one Google share. So I saved up some money and I bought one Google share. Ever since then, of course, things have improved and I've been able to purchase more. But I think I paid $199 or £199. I can't remember. The point I'm trying to make is don't buy a share because you expect things to move tomorrow. That's not the aim of the game. You want to get yourself involved in a company like HL, Hargreaves Lansdown, or Self-Trade, and they make the process really simple. So the process of setting up with Self-Trade, I think I set up quite some time ago, so I'm hoping they've actually advanced. Well, they're not called Self-Trade anymore, they're called EQI, but I still call them Self-Trade. I've been with them for more than 10 years. The process of setting up with them was quite simple. They sent me out a form, which is a W8 Ben form or a W Ben 8 form. Either way, you're going to know when you try and sign up. And that allows you to hold and buy securities in the US. So you've got to sign those with Self-Trade/EQI. They make you physically send out the form. I don't know why they can't just allow me to do it online. So again, you might have to physically sign the form. They want a wet signature, and then you can send it back to them. They allocate that to your account, and then that allows you to buy stocks and shares in the US. It's really not complicated. But of course, there are risks. Bear in mind that you should only invest anything. You should only ever invest what you can afford to lose. As much as you might anticipate the stock market or the stock value to go up, it might not. And this is why I say, understand that you are playing the long game. Overall, we see growth. But again, there's a lot of uncertainty in the market. But for me, I see it as a prime opportunity. I see a lot of undervalued stock. I see a lot of opportunities for some companies to really rebound. I'm taking advantage of that. So again, I cannot personally make recommendations, but again, if you are looking at getting involved in the stock market, I recommend you find a specific strategy that works for you. You determine whether you're looking for capital growth or you determine whether you're looking for a company that's going to pay you dividends. That's one thing that you've got to get into mind. Don't take, again, this is difficult because I cannot give you advice, so I can only talk about myself. I reinvest my dividends. I reinvest my dividends. So I don't take it out, I don't go and spend it, I reinvest the dividends. So that's what I do. Again, what you've got to do is find a strategy that works for you. But I just wanted to explain to you that investing in the stock market is actually really simple. But of course, it's not easy. It's actually really, really simple. And all you've got to do is set up the account with one of these two brokers, online brokers, and they do every single thing for you. So with regards to self-trade, I believe they charge around £10 or £10.50. It might have gone up per transaction. So again, these are the things you've got to factor in. So one thing that some people might not know is you pay the broker a fee. So it means if you're buying a specific share, that price is baked in to them collecting their fee. So for example, if you're buying £1,000 in X company, you're going to pay £10.50 or £11 to the broker. So that means you're already starting off at a minus. So again, as I said, it's nothing complicated. Maybe you can find certain companies that don't charge a fee or don't charge any commission. But as I said, for me, these are the two companies that I've been using for quite some time, and I highly recommend them. I could move away from EQI and find someone else who's a little bit cheaper. But again, I think it's just a matter of complacency. I've been with them since 2008, 2009. In fact, what I'll probably do later is I'm going to go through my portfolio and I will do a video of my ups and my downs and my losses and my wins. But one of the ones that I'm unafraid to talk about is the most disgusting one, which is RBS. I recall I think 2008 or 2009, I can't remember. I was out with some of my friends at university, and I remember jumping up and down because what I used to do, which it can become quite addictive because it's a bit fun, is you put your money in, it starts to go up, and I would refresh it every single second, just keep refreshing and refreshing and refreshing. And by that time, I think I was refreshing and refreshing. I was out with some of my friends. I think we were going out for lunch, and I looked at my account. And I logged into self-trade and I looked at my account and I had made my first £10,000. And I was like, oh my God, I'm rich, I'm rich, I'm rich, I'm rich, I'm rich. A few days later, or maybe a few months later, everything went bam. So I remember buying shares in RBS around £5, £6, and maybe those figures might not be correct, but I specifically remember buying some at £12. Now RBS are floating around £2 something. I doubt they are ever going to get back to pre 2000s, but we'll see what happens. But guys, again, if you want to get involved in the stock market, it's actually not as difficult as you think it is. But you've, of course, got to get yourself educated, got to get a better understanding, find your specific style, understand your adversity to risk. I'm going to be doing a lot more videos and talking about my different investments, what's working for me, what's failed. And in fact, I'm going to do maybe one or two other videos on some of my shares and talk to you about some of them that I've made some crazy mistakes in, including my shares in Apple. I'll catch you soon. Like, comment and subscribe. Do me a favor, if you get some value from this video, make sure you leave a comment or share it with one of your friends.